Welcome to Simple Investing Secrets, your trusted source for valuable investment insights, stock recommendations, and strategies to help you achieve financial freedom. In today's video, we'll delve into the top 7 undervalued e-commerce stocks, your key to 2024 market success. So before we start, if you find value in this video, please support our channel by liking and subscribing to our weekly updates. Now, let's get started. We're diving deep into the exciting world of e-commerce stocks, uncovering the top picks that are primed for significant growth in 2024. Now you might be wondering, why should you even care about e-commerce stocks? Well, with the economy bouncing back and inflation rates on the decline, the stage is set for e-commerce to shine like never before. We're talking record-breaking holiday sales that have sent shockwaves through the industry, indicating a strong fourth quarter for online retailers and laying down a rock-solid foundation for what's to come. The numbers speak for themselves. With rising consumer spending and the economy on the road to recovery, e-commerce stocks are looking more appealing than ever before. And guess what? This digital marketplace isn't just thriving, it's expected to grow even further as new generations embrace the convenience of online shopping. So strap yourselves in as we embark on a journey through the top e-commerce stocks of 2024. Get ready to learn about some exciting opportunities that could potentially skyrocket your investment portfolio to new heights. Let's dive right in. Number 1. Shopify Inc. The roller coaster of stock performance has been quite the journey, swinging back impressively over the past year following a sharp downturn in 2022. This financial roller coaster has been mirrored by Shopify's numbers, which have shown robust results in the third quarter, surpassing expectations for the 5th time in a row. With a striking sales growth of 25.5%, reaching a hefty $1.71 billion, and a net income of $718 million, Shopify not only met industry predictions, but exceeded them by a comfortable margin. Peering into the future, the outlook for Shopify appears even more promising. Analysts have tweaked their forecasts a whopping 30 times for the fourth quarter, anticipating a remarkable surge in sales to $2.7 billion. As we step into 2024, Shopify stands on the brink of sustained success. If the company can maintain its current pace by outperforming earnings projections, the potential for substantial expansion is clear, solidifying Shopify as a standout in its field. Number 2. Prologus Inc. Prologus is a significant player in industrial real estate, standing out for its strategic position within the industry and benefiting from various favorable factors. One key factor is the expected rise in private equity investments in real estate, driven by projections of declining interest rates. Despite facing market challenges, Prologus has offered cautious guidance for its 2024 earnings. However, it appears well-positioned to surpass expectations. Analysts are optimistic about its performance, forecasting an impressive 25% growth in fiscal 2025 funds from operations, expected to reach $6.23 per share. This growth rate notably outpaces its 5-year historical average of 13.1%. Additionally, Prologus demonstrates financial resilience, with its free cash flow per share rising from $5.25 to $6.04 over the past year. TipRank's strong buy rating for Prologus underscores its potential, suggesting a minimum 12% increase from its current position. This endorsement highlights Prologus as a standout choice in the real estate market for the current year, drawing attention to its promising outlook and investment appeal. Number 3. Walmart Inc. stands out as an astute investment option, skillfully combining its long-standing dominance in traditional retail with a robust expansion into the digital realm. The company's transformation following the pandemic is striking. Characterized by a diverse range of third-party sellers and a finely tuned logistics network that consistently delivers tangible results. Moreover, Walmart's third-quarter fiscal 2024 report demonstrates impressive growth, with global e-commerce sales soaring by an astounding 15% to reach $24 billion. This isn't merely maintaining market share, it's a strategic shift that positions the company for sustained expansion and innovation. Analyzing Walmart's digital journey, insights from Oberlo underscore the significant strides it has made in e-commerce. Between 2019 and 2023, the company's online sales surged, more than tripling and achieving an impressive average annual growth rate of 36.6%. This remarkable progress solidifies Walmart's standing as a powerhouse in retail and a proactive player in shaping the future of commerce. Number 4. Jumia Technologies, often dubbed the Amazon of Africa, is poised for a strong performance in 2024. It aims to tap into a market of 1.4 billion people in rapidly growing regions. Unlike Amazon, Jumia's focus on specific regions gives it a significant advantage. Despite facing challenges during the pandemic and its aftermath, Jumia has proven resilient by improving its operations, boosting liquidity, and expanding its delivery network. The company is making strides toward profitability, as evident in its recent earnings report, which shows its narrowest loss since its market debut 5 years ago. As a pioneer in Africa, Jumia offers a unique investment opportunity, reaching international markets with its distinct presence. Additionally, trading at an appealing 1.7 times book value and with forward revenue projections indicating a shift from negative to positive growth, Jumia is shaping up to be an attractive investment in its niche. Number 5, Alibaba has faced significant challenges lately, with its value dropping by more than half over the past 5 years, along with other Chinese tech stocks. However, there's good news on the horizon. Beijing's recent $278 billion support plan has provided a much-needed boost. The company's resilience is evident in its impressive 9% increase in revenue, now totaling a whopping $30.8 billion compared to the previous year. Alibaba International in particular has stood out with a remarkable 53% increase in revenue and significant reductions in losses. This success underscores the company's strength in the market and its ability to adapt quickly. Key partnerships, such as the one with Now, have revolutionized logistics, leading to faster deliveries. Additionally, the introduction of the Choice service on AliExpress, which offers free shipping and returns, has greatly enhanced the customer experience. With increasing order volumes in key regions, Alibaba remains a dominant force in the market, especially in emerging economies. Number 6. Visa Incorporated is a standout in the world of online commerce. Its extensive global payment network forms the foundation for secure and fast internet transactions. Through its dedication to innovation and widespread acceptance, Visa has emerged as a key player in digital business, driving consistent growth in sales. Even amid economic ups and downs, Visa remains strong, consistently achieving impressive growth in both revenue and earnings. Visa's ability to handle transactions is clear. Over the past 3 years, transaction volumes have surged from $2.995 trillion to $3.824 trillion, a remarkable 27.7% increase. In just the third quarter, revenues soared to $8.1 billion, marking a 12% year-over-year increase, along with a 9% rise in payment volumes. As society increasingly adopts digital solutions, the growing trend in card usage positions Visa to enjoy significant advantages. Moreover, Visa boasts a commendable track record of dividend growth, spanning 15 consecutive years, with an annual payout of $2.8. Number 7. Pinduoduo Incorporated shines in the world of online shopping thanks to its platforms Pinduoduo and Temu, which have captured the attention of a global audience in over 40 countries. Temu's popularity has soared due to its attractive combination of low prices and quality products, drawing in more than 100 million users with its extensive product selection and deep discounts. This strategic expansion has strengthened Pinduoduo Incorporated's position in the online retail market. Moreover, Pinduoduo Incorporated has consistently demonstrated strong financial performance, consistently surpassing expectations. In the third quarter, it achieved remarkable results, with a staggering sales figure of $9.65 billion, marking a 96% increase from the previous year and surpassing estimates by $2.2 billion. Its earnings per share, EPS, of $1.63 also exceeded estimates by 47 cents. Analysts anticipate another impressive performance in the fourth quarter, with expected sales reaching $10.7 billion, an 85% increase from the same period last year. And that's a wrap on our deep dive into the top e-commerce stocks poised for significant growth in 2024. With the economy bouncing back and consumer spending on the rise, investing in these digital giants could be your ticket to financial success. Remember, while we've highlighted some standout performers like Shopify, Walmart, and Visa, investing always carries risks. Market conditions can change, and past performance is no guarantee of future results. So it's crucial to do your own research and consider consulting with a financial advisor before making any investment decisions. But with the e-commerce sector showing no signs of slowing down, there's ample opportunity for those who choose to ride the wave. Whether it's Prologus, benefiting from industrial real estate demand, or Alibaba's resilience in emerging markets, each company brings its own unique strengths to the table. This video is for educational and informational purposes only and should not be construed as financial advice. Investing involves risk, including the potential loss of principal. Always conduct your own research and consult with a qualified financial advisor before making any investment decisions. So stay informed, stay vigilant, and stay tuned for more insights and updates on the ever-evolving world of investing. Thanks for tuning in, and until next time, happy investing.